What's up, everyone? Welcome to another live session. Today is Monday, June 8th, 2020. I hope you all are well. For those that are watching, we are on YouTube. Today is the Monday session. Before we start the session, we will be going over some admin stuff, some announcements, really quickly. And the first announcement is if you're not on our community Discord, you need to be there because that's the place where you'll get all our company updates, announcements, and a whole bunch of other stuff, including reviews. So, quickly announcements. Not too much, same thing as last week, but nonetheless, we'll go over it really quickly. So, the first thing is the Institute Trader Smart Effects Man Program. Now, here's the MyFX books. We have three, but I'll show you two for now. This is the default system using default settings. You're looking for around 6 to 10% expected per month on very little drawdown, with an expected drawdown of 5%. Now, if you're looking for something more aggressive, because of ATC's position multiplier, you can definitely achieve something more aggressive and go for returns like this, where you're getting around 25% per month. Again, when you go to 25% per month, the drawdown is only 3.71%. That is ridiculously low. Again, these are just the same strategy, different risk options, and it's all available underneath at ATC. So if you're looking to sign up and get started, please email support@forexlens.com, and they'll make sure to get back to you by the end of the day. So that's the first thing I want to talk about. The other thing I want to talk about was the Traders Challenge. And so really quickly, basically, if you grow a demo account once to a specific target level, you get a free lifetime membership on the Forex trading room. If you do it a second time, you get a live funded 25K account, and that's all free to do. This is free to sign up. All you need to do is be a member. That's the only requirement. And after that, it's pretty much plain House money. So if you're not doing the challenge, I suggest you sign up. If you're a member, there's nothing to lose. And so that's another thing. But again, that man, if you don't have time to trade or you just can't figure out a strategy, let Institute Trader handle it for you. His proof is there. You can see just the accuracy, and again, the drawdown. That's the very key thing to watch out for. So, again, any other questions about any of this, email support@forexlens.com or message Allison on Discord, and they'll help you out. All right, so let's get to it. So in today's session, if you're new, we usually go over a general overview of the markets for the week. So we look for some setups that we will be waiting for. If there's an entry, we'll enter. But usually, we're just trying to ease into the markets. Now, this week we have the FOMC rate statement on Wednesday for the U.S. economy. Now, last time around, their rate was just below 0.25%, and the forecast is saying that it will stay there. So, we just quickly go to Wednesday. You'll see the forecast is 0.25%. So, I do think they'll keep it the same, especially because now there's a few articles I wanted to show you guys. The first one was by Daily Effects, which I highly recommend. Basically titled U.S. dollar and yen may rise if World Bank outlook updates sour sentiment. So the World Bank, if they start to see that the pandemic has kind of reached its peak and cases are dropping, no new cases are coming, and economies are starting to reopen, then you may see the yen and the dollar rise for sure as they're being safe havens. And a country has in fact pretty much opened up. So New Zealand, with no active cases, is lifting all of its coronavirus restrictions. So New Zealand is back in business. It's pretty surprising that they're pretty much the first ones. Obviously, we know China, but in terms of all the other countries, New Zealand is going to be ready to go. So pretty interesting. So if you're looking to travel, New Zealand's open for business. If you also look at CNBC, they also have an article. New York City starts reopening. New Zealand says it's eliminated the virus. So New York is starting to open, and when we talked about on Friday, the protest pretty much in 50 states, it got pretty chaotic over the weekend, but nothing too much where the military had to come in. But they're definitely in a tough spot. So I wish Trump luck because they're definitely applying some pressure. But for now, I guess New York will open despite the the huge numbers it had for the pandemic and the ongoing protests. So with that being said, USD Rand as a setup we discussed I think last week early, maybe Tuesday or Monday. and my alert got activated on Sunday, and I don't trade Sundays, but I wanted to give an update. Now this trade can be entered right now. Again, you can see the downtrend we're in is no way we're retracing from here. If anything, if there's a point in time we'll retrace, it's probably gonna be down here, if anywhere. So I'm just gonna be looking for an entry for you guys on the 4-hour time frame. I'll probably call a signal. Our previous exotic trade played out fantastic, and so I know there's significant potential here. So I'll probably wait for this 4-hour candle just to clear this kind of previous 4-hour candle, because this previous 4-hour candle was a bullish engulfing. I don't know where it came from. Maybe it's just the surge from New York session, but I'll just wait for this to kind of calm down and clear this previous low down here. Right at 16.71. So once it clears that, we'll go short. It's probably because Wall Street opened and stuff happens, but that's one setup I want to enter. Again, the R2R is pretty good considering it's a swing trade, and if we enter somewhere down here, I'm pretty sure we can make our stop loss, half of what it is right now. So put an alert right at 16.68800 and pricing down, and we'll see if we get an entry in the next 4 hours or so. Majors. So let's talk about the majors. We took a pretty deep look at the majors on Friday. We were pretty much focused on determining where the majors will go, and one thing we talked about was possibly shorting euro, and the only time we would do that is if these 4-hour candles started to trickle down. Now if you look, this was on Friday. We have this inverted hammer, which is great, and we actually had a few inverted hammers over the weekend. 1, 2, 3, 4, 5. We had 5 inverted hammers since Friday. Now it's pretty good for shorts, but we have kind of consolidated here. You can see the past day and a half of trading, we haven't done much, right? We haven't done much, and this could be just a kind of a note that a move is imminent, either downside or the upside. Something's going to happen. Something's going to break. We can see the consolidation zone is around maybe a 40 pip consolidation zone on the 4-hour time frame. Right now we're trying to break above the box right now. So if we do break above, I'm not gonna be rushing to longs. I mean, the resistance is about a stone's throw away. Not really worth it in terms of R2R, even though it's around 70 pips away. Just because we failed to create a new high. I mean, we created a higher high here, a higher low, and we just consolidated. So that's a bit worrisome. So I wouldn't take the long. I'd wait for it, either price to come up here and break the resistance, and then we go all the way back up here, all the way to some, maybe 1.16500. Looking to the left, we have this high right here we can target. Right, so that makes sense. So 1.1500. But as long as we stay below this 1.37800, 1.13800. 1.13800 resistance, I think we'll go short. So I'll probably wait for the next 4-hour candle as well, just let the markets kind of digest, because it's the first full day of trading, and then figure out if we're going to go short. But ideally, I think the short is the most likely option with more downside. So compare the downside, we can go all the way down to these lows compared to the upside. The downside is definitely more rewarding in that way. So we'll see. Obviously, we haven't missed much since Friday, Sunday, and going into early Monday. So the markets are probably kind of playing the snooze for the first half of the day, which is fine. Last Monday, we actually got 3 trades in on a Monday, so I go with the wave. Another pair we looked at was pound. A similar story again. We can either go up to this resistance or we'll look for shorts. Otherwise, if we do get a bearish break below 1.26400, we'll go short. So you can see the previous 4-hour candle that closed did wick down here, but no candle closure. So looking to the left and see why we chose that level. A pretty nice little wick area for a resistance, and that's where you want to go, is short, and it does look like we'll get there. I don't know why, but this current 4-hour candle on many of the pairs is is definitely coming back and making those gains against the dollar. So we'll see. I think Trump is addressing the nation later today. Well, he's addressing them every day, but we'll see more so about the economy. But this is the R2R. Obviously, 11.83 is the best case scenario, but we can probably make it like this. So I'll send in this chart work. Again, I don't like to send in chart work on Fridays because new members might come in and see that and then enter on the Sunday. So, or even enter on a Friday. So I'll send this in now, but again, very clear entry 5.5 R2R is not bad. For people on YouTube, any pair recommendations and questions, I will get to them. But the place to be and the place to ask is definitely our Discord. It's free to join. The link to sign up is in the description of the video. So we do have black gold, US oil, perfect. And I believe that's something we analyzed as well. Oh, one more thing before I go to that, USD CAD short. So, this is a trade we discussed last week, and, it would not give us the entry. It did sneak in one, Friday, but it's too late. So that Friday at 1 p.m. we did get an inverted hammer to go short, and it was, it has moved quite a bit actually. Remember, this is where you're waiting to go short. We just never got that entry, and then finally, we got it right here. Then you can see price went down, pulled back, rejected the support with another inverted hammer, and went down again. So patience, I guess, and just discipline. But we'll look for a new entry now. And actually, the previous 4-hour support has created it. So if you see this on the 4-hour time frame, we're looking for shorts here. We just never had that inverted hammer until it's too late on a Friday. But we have created some new 4-hour support down here, right? And we can target a break of that to go short. So right now the 4-hour candle has broken the support. So the support's at 1.33900, but the current 4-hour candle is not a bearish candle that we like. So either we can wait for 1 p.m. for this to turn bearish, or just wait for 5 o'clock. But whenever that happens, we do have this as a downside target and this as well. So it's still a viable setup nonetheless. You can see it's plotting it. Here we have a 3.0 R2R setup, and that's with a pretty conservative risk to reward and a stop loss. So this is the setup we'll target this week. It was too late that on a Friday we got the entry criteria. We don't enter on Friday, so we'll look to kind of reevaluate now. And so if the Forex spots could be great and be nice to us, this body can just close up this wick. That'd be fantastic. You can enter short, but looking at the stop loss is 50 pips. That's not bad considering the downside is 150 pips. So that's fantastic. So I'll put an alert, maybe just a bit down below here at 1.33824, and I'll send in a chart work as well. My goodness, why is this? Oh, I can't get it. So I'll put it actually a bit below. Here. Whoa. Apologies for that. Apparently if you hit backspace, I'm sure you can do this thing. Flip back. So we'll put it at a 1. Wow, it doesn't save my stuff. We'll put it at 1.33700. That's a good spot to put the alert. So somewhere down here. Perfect. So right here, 1.33700 crossing down, and remember that 4-hour closure is very important. It needs to be bearish. It can't be a bearish hammer. So don't even try entering on those candles, because the current candle is a bearish hammer, and if anything, could definitely be a creation of a new high if we enter now. So just be cautious. But again, this is the R2R. I'll save this and send it through, and we'll see if we can get an entry by 1 p.m. Whoa. So now that we know that USD CAD is looking to go lower, US oil should be expecting to go higher just because of the inverse correlation. Again, people on YouTube, I will get to your pair recommendations in just a sec. So here we have US oil. We took the long last week. We had this first leg, which is nice. 150 pips was right here, and then we pulled back to our break-even point, and then launched up again to our final target. If I remove this, you can see US oil has slipped quite a bit this morning. It's actually pretty surprising to see. But again, the dollar is forecasted to be a bit bullish. Obviously, had great NFP numbers last week, absolutely fantastic. So the current daily candle is coming off this level we chose, this 39.32. And we chose it because it was a pretty good support. If you look all the way to the left, back in July 2016, we got support. Earlier parts of 2015, we got support. And also, if you look at it, it was the next high, right? So from the previous day, we created that high here. Since then, we've pulled back. So, this type of pullback isn't unheard of for U.S. oil. We've had it once here. We've had it, once here as well. So obviously, the uptrend is too significant for this to be a complete trend reversal. But I just think we need to, again, let the markets digest the near open and then kind of figure out where we're going to go from. But even if you draw something basic, very basic technical analysis as a trend line, you can see we're still well within the trend line of an uptrend. So just let it play out. But again, if US oil starts to drop, then maybe USD CAD may start to reverse. So this is pretty significant though. I'll tell you that. Don't be surprised if we do make our way back down to here, right? Back to 36.31. And actually, we could technically get an intraday setup. I mean, yeah, we could. So, you know what? I don't usually like going against the trend. We'll see. You can see what I've done. I just identified that previous high we made when we went wrong. This is our higher high, higher low, and then new higher high here. Currently, we're resting on that previous higher high at 38.10. Now, if we do break it on the 4-hour time frame, we could have an intraday trade back down to this level right here, right? Not my most favorite steps to take. I usually have to go with the trend, but if the R2R is fine, then I mean, why not? The 2.7, our stop loss would be around 33 pips, so it's not bad to be honest to go with this. So I'll keep it as is. I'll see if it does end up giving us an entry. For this trade setup, I'll leave it up to me, so I'll call it. You guys don't have to worry about it. I use my own judgment. So, but this is just the idea that we may have. Whoa. I'll save this. Alright, so let me get to some pair recommendations really quickly. So US oil, mixed right now. Long term is still long, I'd say. But definitely on the intraday, we may see some shorts. Just depends how much of a short we'll see. So definitely be careful about that because I didn't see this coming. I think on Friday I was expecting maybe new highs for this, but again, this is US oil versus the dollar, and so pair recommendations. That my effects book was for Institute Trader. He is the trader for our Smart Effects MAM program. He also provides signals, but the MAM. This is what I wanted to show. Someone asked for gold. Okay, perfect. That's a good option. So if you remember on Friday, gold was dropping out of the sky because of the very nice NFP numbers, and I really dislike how TradingView moved this to contract for difference. But anyways, gold. Okay, so this is the idea we discussed on Friday, where we came into this wick area, and if you look to the left, on Friday we saw gold melt, and then at one point, this was during the session itself, it printed this 4-hour hammer off this level of 1675. You had a rally here, right? We had buy here, a buy here, a buy here, and a buy here from this exact level. Now I said, with this bearish hammer, I would not go short. It's a dumb idea to go short on bearish hammers, especially off support. And so what happened was, we had a bearish hammer, a bullish hammer, a bearish hammer, and then we had a bullish engulfing candle, and then we did have some upside momentum. And so when you have all these conflicting price actions, we have just a bunch of bullish signs. You should never go short. And these, just these three candles alone should have told you that, hey, you could probably go long for a couple pips. And if we were being precise, it went up, on 70 pips. So if we just, move this over to the side, you can still see that, this candle does turn into a 4-hour bullish hammer. We could go long. It'd be not a bad option to do so. You do have to realize that we are in a significant downtrend, right? If you just look, it's connecting the highs. Right, you can see we've had, significant sell-offs and significant retrace, followed by a significant sell-off. And we could have a significant retrace that could end somewhere here before you go lower. So, the best bet to get the best, entry for longs is actually waiting for price to make its way back all the way here, right above this 1700 psychological level. If it gets back up to 1700, then we can take a long at least to this previous level, right, 1721, and then hopefully all the way up to 1735. So that's what I'd probably do, because it's gold can be very volatile, and I don't want to rush an entry into this, especially since we are in a downtrend. So if we do break above 1700, we are not only coming to a psychological support, we've also broken a trend line in doing so. So this is the thing you got to watch out for. Again, it's a Monday. We don't have to go full force right now, but again, if you see a candle come up all the way here, that tells you two things. We broke the trend line, we're at the downtrend line, and we're at a psychological support. In that case, we should rise up to the upside. So we'll let that play out. You can see the current 4-hour candle is obviously, it was at first a hammer, now it's an indecision candle. So the volatility is definitely there. We just have to be on the correct side. So gold, I'm still looking for longs. That's probably the best setup to take. If we do break the support at 1675, then shorts is a go. But again, based on the reaction over the weekend, I do think the buys are the more likely option. But we'll be fluid with it. We'll be adapted. If we do make our way down here, then for sure we'll take the short. But as long as we stay above, we'll look for the longs. But again, 1700 psychological level, and I'll actually adjust this now. And I'll put a call out just to make this very clear. Alright. So that's gold. I think we're going to go to the upside. We have to do a few things first, satisfy a few criteria before we do so. What's the MyFX book for Institute Trader? I'll just send you a link right now. This one is the default. It even says in the link Euro USD. I'll give that a look. We gave that a look already, but I'll quickly go over it again once real quickly. So that's gold. I'll save this and I'll send it through. Okay, so next up, someone wants to see Euro USD. We went over that setup right now. Quickly. This is what we have: a consolidation box and either a break below or above will let us know. But the break above, I'm not really interested in it because the 70 pip move to the upside. Obviously, 70 pips is nothing to scoff at, but because just the way price action has reacted to this level, I'd be careful about taking longs. And if I would only take a long if we do break this resistance right here, and I target 1.1500. However, I think the downside is the best move because the downside potential is so large that it's more worth it. And if we do break this consolidation box, then I'll be going short. And right now you can see the current 4-hour candle, it was popping all the way up here, but since then it's turning to an inverted hammer. So this morning, whatever the case may be, whatever the event may be, the volatility is there, and so I'll just identify the specific level, 1.12750. How do we make this a nice easy level? Then we need a break on the we need a break on the 4-hour time frame. Okay. 4-hour bearish closure below 1.12750, and we can go short. I'll put an alert just below that. So my alert's gonna be at 1.12715, crossing down, and we'll see what happens. So that's the likely scenario in my opinion. So, alright, let me check YouTube. Any pair recommendations or trading related questions on YouTube? It could be basic stuff as well. That's what I'm here for. Euro pound, perfect. I'll give that a look. Euro pound. So here's Euro pound. We discussed long last week, and you know, the initial move up, it was so, you know, none of the 4-hour closures what we wanted. So we had a long idea from here, but this candle wasn't the candle we wanted. Neither was this. We finally got it here, and this was actually during the London session. So for those that are awake, you could have taken this trade since the R2R was 1.5. It went to our target and then since then pulled back. And you can see where it has pulled back to that exact kind of support we were trading off of. So we could have that same exact long again. So we had it plotted from here. We didn't get our entry. So we had this idea originally for Euro pound. Our entry criteria wasn't satisfied until this bullish hammer, and at which point we did satisfy our final take profit. So we're gonna have that same similar setup again, because it's the same level, right? So you can see we've been stuck in between these two levels, right? For if you look at this quarter, since May 18th going into now, so for the past 3 or 4 weeks, we've spent 80% of the time, or even 90% of the time, within this box, with one surge above it, but that's about it. So what that tells me is price wants to consolidate, so we'll trade the consolidation. Same entry criteria as last time, and so here it is. 0.89170 equal go long. So we get a 4-hour bullish closure above 0.89170. We're going to go long. We do not use pending orders, so these wicks that, you know, trap you into trades, we don't like doing that. We like to watch the price action. So this is my opinion for Euro pound, and the stop loss is 30 pips. 30 pip stop loss, and we have around a 75 pip take profit. So that's not bad at all. We'll see how this goes. So obviously the support is still staying put. Last time around we had a lot of wicks to the downside until we finally jumped up. This time we had a few wicks down to the downside, and we even had price close below that support, but then pull all the way back up. So that's telling me price is very reluctant to go lower, and therefore we should be looking for longs. So Euro pound long, I'll send this in as well. Yeah, it's a good setup. I think this will be a setup we'll get a tree on. Definitely a nice setup. User requested TA. Okay, here we go. Euro NZD. Oh, perfect. Thank God you asked for this. Alright, so Friday we discussed the short for this, and my goodness, you're given entry criteria. It satisfied our entry criteria. That is actually perfect. So it satisfied it on the 8th at 1 a.m. So last night at midnight, it satisfied our entry criteria. And if you entered, you would have been in some nice profit right now. Wow, that's a nice setup. So here it is. This is. Let me see if we. I don't like to send chart work on Fridays. Let me just make sure that I did it. Okay, I did. Actually no, perfect. Thank God I did. Anyways, so we bought this on Friday, and you can see all we wanted was a 4-hour bearish closure. Now you can see this inverted hammer is the candle you want to enter on, one of the candles, right? And if you look just based off entering that candle, you could have made 37 pips, which is not bad, right? Now this current candle is an indecision candle. It was at one point an inverted hammer, right? It was all the way down here, which would have gave us the go ahead to enter now. Since then, it's kind of pulled back, and you can see the wick at the top and bottom is relatively equal. I know the wick at the top is longer, but in hindsight, if you just look at it, it's pretty much equal top and bottom. And so what we'll do is just wait for this 4-hour candle closure to give us the go ahead. So hopefully this thing can make its way back down here and close the rest of this wick. We have an inverted hammer and we'll go short. Our downside is all the way at 1.70 thousand. So yeah, this is a fantastic setup, and thank you for bringing it up. And we discussed this on Friday. Today's Monday, so maybe end of day Monday we could have an entry, depending on how the markets feel. But fantastic setup. So I'll put an alert right at the bottom of the wick to let me know it's closed off and we can go short. But my short is going short is my bias for Euro NZD, especially since New Zealand is opening up. That should be really good for the New Zealand dollar, and therefore it should bring Euro NZD down lower. So it all makes sense. It all works together. Next up, we had a bunch of pound pairs. Pound dollar. Alright, so a whole pound also. So DAX. Definitely get that a look. So I gave a setup for the DAX last time around. Let's see how it's doing. Right, so it's just about an arm's reach away from the target we had, the first target, which was around 130.11. So as discussed last time, we were waiting for either bearish reaction here to go short or a bullish reaction to go long. Obviously, we got the bullish reaction here, and price is moving its way. So I do think it's going to reach 13,000 this week, maybe by midweek latest. And I think that's where it's going to go. Obviously, if it closes above that, then the next step will be 13,500. But that's pretty much it. I mean, with indices and stocks and commodities, the candle itself, the bearish and bullish closure isn't too important. I mean, it does give you the high accuracy, but usually stocks tend to go it's so easy to predict where they go. You don't have to look into the candles too much. And even with the German index, as long as you follow the trend, you're in good shape. If you follow the the specific levels like the support and resistance, you should be good. So yeah, I think 1300 is fine. If you break 1300, maybe look for 13,500 for the dollar, for DAX, $200 index, but for DAX. So next up, pound dollar. Again, we talked about this already, but we're just waiting for a bearish closure below 1.26400. I'll put an alert here, and I'll actually send the chart work. Alert's going to be at 1.26387, crossing down. I mean, a 4-hour bearish closure. Okay, someone also asked for pound yen. And so, pound yen, we had a long for this trade last week, and we got out when we really shouldn't have. But we wanted some deep drawdown, and then we got out, and this thing launched to our target, and actually then some. But since then, it's pulled back. Now, this is a pretty aggressive pullback. I want to go to the weekly and kind of see why this happened. I know this is a key level that we drew up, but so here's that buy signal we had. So on the weekly, let's see, we're coming off this support. Obviously, this was during the peak of the pandemic. We'll play this anyways. We had it's the monthly time frame, so we had a bullish hammer, a bearish hammer, a bullish hammer, a bearish hammer, and then this candle. I still think we're gonna go to the upside, even though this candle does look a bit suspect with the pullback. I think it's time to go to the upside for pound yen. Let's check the weekly. The weekly tells a different story. We could pull back from here. It does make sense. Is there any fundamentals this week for the pound? Let's see. Maybe this will give us some guidance. Nope. GDP. Okay, GDP is supposed to be bearish, and manufacturing as well. Okay. I mean the weekly does look a bit alarming for longs. Let's see the daily. I'd probably wait for the daily closure. The daily closure will tell us for sure. It is Monday, and we have 4 days in the week that could change the weekly candle we're looking at. But yeah, no, this is a pretty significant sell-off. And yeah, you know what? I'm gonna remove this line and just identify. So I'm gonna identify this previous swing area. So if you remember, if you recall, we have an uptrend where we pull back, we create some support here, we go up, make a new high, we pull back, and then we launch up to make a new high. So this kind of level right here, this 137.385, is a key level for pound yen right now. Recent price action is a key level. So 137.379, I'll put a call out. Right, this. So if we do break it, we could go short on an intraday level, right? Just get this 100 pip range out of the way. So we could take this trade. So I'll put an alert just below that to notify me when that does happen. So I'm going to be at 137.330 and crossing down. But this is a pretty sharp move. I'm surprised that we had this, considering the momentum we had for longs. But you know, we could very well come to this exact level and then launch up to make new highs. So you know, uptrend is still intact, but if we do dip below in and around this area, then price will be pulled to come back down to this previous low. So that's my idea for pound yen. We have a lot of setups pending. Perfect. We'll get something for sure today, that's for sure. Next up, pound CAD, pound Aussie. So we'll quickly go through those. Maybe looking at a short, today's short. This is our last 4-hour support right here. We drew this a while back, but it's still holding intact. We did get an inverted hammer closure below. Obviously, this one is very volatile. I don't know what's going on in the markets, but they're all moving pretty chaotically. Anyways, this is currently the inverted hammer. Right, you know, a few minutes ago, it's this perfect candle. You know, you could have a nice intraday trade like this one right here. Target these lows down here, enter now, and then have a stop loss. Right, 2.25, not bad at all. And again, the stop loss would be 23 pips. So actually a 25 pip stop loss. So 25 pip stop loss around a 60 pip gain. That's not bad. Obviously it's an intraday level trade, so this would be on the option as well. We are looking to short USD CAD, so we could take USD CAD and pound CAD shorts together. I'll put an alert and let you guys know at 1 p.m. if we can enter this. The markets are definitely moving pretty crazy right now, so I'll let them do what they have to do, but my alert's going to be at 1.69677, and again, I'll let you guys know at 1 p.m. where we will enter. If I don't say anything about a specific pair, and we're not entering it now, I'm just going to wait it out, but I say intraday short for this as well. Pound Aussie, I'm pretty sure pound Aussie is melting from the sky right now. It's not yet. So pound Aussie now. Wow, we had this drawn up, and did we not take this trade? It was given on June 1st, but we got a perfect closure for it. Okay, so this is just plotted. But anyways, pound Aussie. I think I was probably just plotting and I never really got into it. But anyway, pound Aussie. We had a potential short last week. I drew this up maybe the week before on the weekend. We got that 4-hour inverted hammer. Once you get the inverted hammer, you're in the money. You get that short, you get around 60 pips, and then you get another inverted hammer, and you get short all the way down to the support. Now you've seen this, we've held the support for about 7 days now, right? Almost 7 days since the second going to now. So technically 6 days, 6.5 days, we've held on to the support. Now if you look, although we drew our line here, this line's at 1.81 thousand, you can actually adjust it because recent price action has actually created support down here, right? You can see these 3 wicks aligned perfectly and like that. So that's our new support area. So the trend is definitely short. You can see that, right? We have significant sell-off. I mean, just keep climbing, right? Since May, we've been in a significant sell-off, right? We've have, huge bear sells, and then we had consolidation, at support, break of support, we go all the way down, and now we have support created again here, we have consolidation. So we need the same principle, and if we break that support, we should be headed back down to 1.74 thousand, right? And if we pull back to the monthly, you'll see why these levels are drawn where they are. Here you have it. So if you look on the monthly time frame, back in 2018, we used that exact level as support. And if you look at the price action, whenever we come in between this line and this line, we tend to make our way back all the way down to here, right? We have one moment here, another here, and then eventually, hopefully, another time here. So that's what we're looking for. So we're going to go back to the 4-hour time frame, reset that, and here is what we're looking for. So we're looking for a bearish 4-hour closure below 1.8617. Now I know we are about 80 pips away, but pound Aussie can move 80 pips in a 4-hour candle. It can move very quickly, so we won't have to wait too long, believe me. And this is the setup we'll have. So 4.7 R2R, and that's it. So I'll put my alerts right at 1.8500, crossing down. Again, 4-hour time frame. You want a bearish closure, either a bearish engulfing candle with no wicks at top and bottom, or an inverted hammer, and you can enter the short. Alright, perfect. Next, what do we have? Yeah, dollar CAD is looking good. USD peso. Let's take a look. Now, I believe we did do analysis of this. Let me just try to find that chart. Maybe not. But short. USD Rand is a short. USD Peso is a short. Okay. We'll just do it from the top again. So yeah, I was talking about maybe taking exotics, trading them more, and they are definitely a lot easier to trade than I originally thought they would be. The only downside is their spread, but here's your setup. This is all you need to know about USD Peso. This is all you need to know right here. And then you just gotta get the minor details. For example, resistance in the past right here. You can see resistance here, and so that'd be a nice target zone, and that'd be the first target of our trade. If we do break this resistance, we're probably headed down to these lows or these highs right here. You can see resistance once, twice, 3 times, a lot of wicks, and this is the weekly time frame. So a lot of these levels we spent multiple weeks at and months at. So that's the setup, and it looks very similar to the South African Rand setup. And then if you want to get entry, if you look at the weekly, you can see we've had this wick and this wick. So if you have some support here on the daily and 4-hour, Right, so if I head over there, you can see we have these wicks here on the daily, and we also, if we look to the left, you can see in the past we've had these 2 wicks here. So if we identify that, now we have kind of a key level, support, or just a important level, right? We had an important level here, we launched up from here, and then we've created support in and around that level. So if we do break this level, we are headed lower, and you'll at least get this first target, that's for sure. So if we go to the 4-hour time frame, you can see what's happening since then. So here's that 4-hour level we discussed. You can see we've pulled back, and so we'll let price mess around, consolidate. But once it breaks this level, we know it has direction, has a sense of purpose, and it wants to go lower. And so looking to the left, you can see again, we've used this past zone to support many wicks at this level before we launched up. So that's going to be why we're going to enter there. Here's your setup. So 3.68 R2R. It could be a bit tighter to stop loss, but since it's an exotic, I just want to give it all the breathing room it needs, and that's my opinion. So short for USD peso, and my alert will be at 21.39411, crossing down, and that's what we need to watch out for. Alright, so we're approaching an hour. I tend to not like to go over an hour, just to make sure no one falls asleep. So let's see if there's any last minute questions, and then if there's... Let me check YouTube, make sure you guys are all well. So awesome. So we just covered USD CAD, Pound Aussie, Jarena Hood. Can you look at Pound Yen? We just looked at it. Quickly explaining that again, just following what I showed you. Possible short if we break 137.380. That'll make sure we clear the previous low, which is right here. So that will take a short. If we do rebound from here, then we'll be looking for longs back to the upside. Pounds tend to be very volatile, and so you gotta let them kind of chill out and get their sense of direction. Especially from Sunday to Monday, some weird stuff can happen. But I think we'll have a setup very soon. We'll know shortly enough whether we're going long or short for pound. USD CFH. I've never traded that pair in my life. We're talking about CHF? I think you are. So let's take a look. Daily. Interesting. 4-hour. Let's see. The price will probably, yeah, I think it's gonna retrace from here. I think USD CHF will make its way back down to this previous low support area, 0.95500, and then pop back up. I don't see it going any lower, especially the way this current 4-hour candle is looking. Again, the current 4-hour candle is a bearish hammer, and that's not a good candle to go short on. So I think you'll squeeze out some more pips back down to here, then go back up. We could take an intraday long from here, but again, if you look at the grand scheme of things, the weekly, it is definitely pretty bearish. I'll say that. So last time we discussed this pair, we talked about we have an arrow here pointing at the previous weekly low, right? It's at 0.95130, and so if we get there and we get a bounce, we'll go long. If we get a break, that'll be the best thing that can happen to us because we have huge downside potential to go short. So that's one place we can go all the way down here. So obviously the weekly looks bearish. The intraday level looks a bit suspect, especially with this bearish hammer. So I'll probably stay out of this trade until we clear this 0.95130 support, and then we can take a huge short. Alright, perfect. So any other recommendations, guys, send them on Discord. I'll let you guys know. Again, we've covered I think like 8 setups, so that's enough for a Monday. And any time to get activated, I'll let you guys know. Now, if you're watching this on YouTube and you want to join in on our sessions, recall Monday and Friday are our free sessions. Tuesday and Wednesday is when we make most of our profits and our signals are sent, including mine. If you want to join those sessions, we have a great promotion. It's called 50% off your first month promotion. To take advantage, you're going to use this coupon code FIRST50, and all you do is very simple. Is you go to forexlens.com, go to Forex Trading Room, click Get Started, fill out this form, and then click Next. And then when you click Next, there will be a section called Enter a Coupon Code. If you enter FIRST50, you get 50% off your first month. You get full access to all my live sessions. You can go to user requested TA and ask me questions throughout the day. I can be your mentor. You can also get access to all of our providers. We have more than 5 signal providers, as well as a host of other analysis. For example, we have Elliott wave analysis, stuff from price action, the other price action traders. So a lot of stuff there, and it's only $48.50 for the first month. So that's the coupon code FIRST50. Hopefully I see some new faces in tomorrow's session. Otherwise, I'll see your paid members. I hope you guys have a great trading week, and I'll see you all tomorrow. Peace.